Every day of our lives, we're on the verge of making those slight changes that would make all the difference. Mignon McLaughlin, those slight changes, that's the little things, or those are the little things that you do every day. We say 10 to 15 minutes a day. That's all we ask each and every day the market is open for you to track these charts, learn the skills. That's only going to happen with you spending time in the market each and every day. But it doesn't have to be a lot. I spend a whole lot more than that every single day to bring this to you for free. I'm asking you to do less. So please, you will see the results in more and more successful practice trades if you'll just do the work. Just do the work. Every day you will get a training. Every day you will get the market review. You can print out in your show notes those daily market worksheet, weekly market worksheet, and trade worksheets. I'm going to put up again at the end of today's video those 3 videos about how to use each of those worksheets, how to fill them out. You will find that invaluable. Now let's talk about where the markets ended the week. The S&P up a little bit. The NASDAQ 100 down. 20-year bonds down, gold just about flat, Bitcoin up a little bit. Let's jump first into the S&P 500. How did it end the week? A green up candle. Now it is a spinning top. It's got a long wick on the top, a little one on the bottom, pushed through the weekly trend line, but the overall mood still negative. Why? Because the price percent oscillator is still negative. So is the derivative oscillator. But we did have an up week. What do we see with the 2-day? Still not enough energy, and this is the first day of the latest 2-day candle. This candle will finish drawing on Monday. Still negative on the price percent oscillator. Derivative oscillator losing downward momentum. We can see that we did not hit a higher high so far as we did in the last 2-day candle. So we'll continue to watch. They've blown through the weekly and the 2-day trend lines, but still negative. We'll see how the new week starts. Remember, we're still in a bull market. What typically happens in the bull market? You have pullbacks. We kept talking about take your profit during the pullback. Know what it is before you enter a trade that you hope to gain as far as profits go, and go ahead and set that loss parameter using what? Well, using your profit and loss bands. We put that training out all the time. Very important to understand how you use those profit and loss bands and then to use them. So this is where we are on the 2-day. Let's go to the half-day. We can see where things hit their peak on Thursday, and on Friday they just sort of slid sideways. Again, the S&P barely up 0.12%. Now that derivative oscillator still climbing. Still green. Price percent oscillator still climbing. I say price percent oscillator all the time when I mean to say derivative oscillator. This word right here in front of me, every time I'm looking at the price percent oscillator, I'm seeing derivative oscillator. Price percent oscillators over here. For those of you who are not using TC2000, and again in the show notes you'll see a discount code there. Use that to subscribe. It'll save you 25 bucks. But for those of you that don't, for some reason, use what I think is the best software or trading platform in the world, which is TC2000, here's the settings if you want to know them. Price percent oscillator 10 and 24 with an 8-period exponential moving average. Derivative oscillator 14, 5, 3, and 9. All that stuff is on our charts every single day. People write me all the time saying, I use Thinkorswim and they don't have the price percent oscillator, but can I use the MACD? What are the settings? Like, well, the settings are here every day for you. So let's leave there. Go to the Qs. What do we see happening on the NASDAQ 100? Well, let's start always with the weekly chart. What do we see there? Down candle, did not hit a lower low, did not go lower than it did last week, but that price percent oscillator still moving down. Derivative oscillator, red down candle. So again, overall mood still down, price below the weekly trend line. Go to the 2-day. Busted through that 2-day trend line back on the Wednesday, Thursday 2-day candle. We have a red spinning top open box. That means a slowdown in the up movement. Was a down day, 0.81%. That's what our Heikin-Ashi candlestick showing us. The price percent oscillator, we can see is heading down. It had been flat. and the derivative oscillator still negative, losing downward momentum. Again, remember, our lagging indicator is the price percent oscillator. Our leading indicator is the derivative oscillator. The derivative oscillator is a triple smooth version of the relative strength index. Those of you who understand the relative strength index, you can then have a better feel for what the price percent, what the derivative oscillator is telling us. MACD, remember that's what the price percent oscillator is, a percentage version of the MACD. Great reasons for why we use these, explained very well in our book. If you want to support us, you'll see a link in the show notes. Buy the book. It'll help speed up your training immensely. Now, that's where we are, red spinning top on the 2-day, first day of that 2-day candle. What do we see on the 4-hour chart? Well, or half day. It's actually 195 minutes because the market isn't open 8 hours. It's open to 195-minute halves. What did we see in the morning? Down a lot, a little bit of recovery in the afternoon. Overall for the day, down 0.18%. You can see where the price percent oscillator still heading up a little bit. Derivative oscillator green, but losing momentum. So again, we'll continue to keep our eye on the cues. Didn't penetrate on that 2-day chart yet. The weekly chart, we'll see how the week starts off and if things continue to move down. That's where we are on stocks. Let's go to bonds. Bonds down big for the day. Our biggest downer, 2.12%. We can see, well, let's see. This week, have we reached a lower low? 135.65. Yes, so lower low for this week. Price percent oscillator, again, accelerating in its down move. Derivative oscillator gaining downward momentum. First day of the latest 2-day candle, nice, spiking down, hitting a lower low. Derivative oscillator still losing downward momentum, but negative. Price percent oscillator had been flat, now moving down more. That's good to see. And what did we have happen at the end of the day? We had the half-day chart cross back over, going down. So again, it's good to see that downward momentum continue. Remember, what did we have happen? Well, we had that 2-day recross all the way back on the 3rd of February. And again, it went down for 2 days, sideways for 4 days, then down for 10 days, and then up for 2 days, started tracking down and sideways. And then this latest, first day of the latest 2-day candle, nice, strong down movement. So we'll continue to keep our eye on the accuracy of this 2-day recross. Now let's move to gold. Gold just about flat, down 0.02% for the day. Overall, though, we look at the weekly chart. What do we see? We see a nice down candle, lower low in gold. We see the price percent oscillator losing a little bit of that energy, but the derivative oscillator still heading down. 2-day chart, we see how it's flattened. We actually hit the low on Tuesday. That was a Monday-Tuesday candle. And then sideways on Wednesday, Thursday, and then a red, solid red spinning top. So some indecision there. But again, just sort of flat. Price percent oscillator might be heading up a little bit, still quite negative, and the derivative oscillator losing downward momentum. Half-day chart, it crossed over going up in the morning on Tuesday the 9th and sort of tracked up, slowly building energy, and then that big down movement in the morning on Friday and sort of recovered some in the afternoon. So again, the overall mood in gold from going all the way back to the 2-day recross back on the 14th of January is still quite down. We'll see what gold does as we continue to move along, but as you look at that weekly, still decidedly down. Now lastly, for you Bitcoin fans, Bitcoin up a little bit, 1.07%. You guys remember the beginning of the week when the price percent oscillator was trying to cross over? We told you, hang on. You don't have a weekly vertical crossover until the end of the week. Well, it pulled back through and we didn't have one. Price percent oscillator moving along pretty flat, still above the red signal line. Derivative oscillator losing a little bit of downward momentum. We go to the 2-day chart. What do we see there? We see the price percent oscillator is flat. Derivative oscillator losing some downward momentum. We see the candles moving up there for the latest 2 days, or latest day of the 2-day candle. And if my dog would stop barking, I could concentrate a little better. Sorry about that. So looks like we're hitting about the same spot. And we go to the half-day chart, and we can see where it's slowly but surely moving up. We see the derivative oscillator losing a little bit of momentum there. But again, overall, what is Bitcoin doing? We're waiting for the 2-day recross going up, if indeed that happens, or if Bitcoin loses its energy and we have that weekly vertical crossover over the part of this next week, that could happen too. So again, nothing's going on Bitcoin right now. We're waiting for one of two things: 2-day recross going up, weekly vertical crossover going down. And we don't have a signal yet, so we're not doing it. We're going to wait. God bless you, my friends. Thanks for putting up with the barking dog. Hope you have a great weekend. Hope you're filling out your weekly market worksheet. All the best from the whole team at Charting Wealth World Headquarters.